Consumer prices, which appeared to be receding from 8.6% in April to 8.3% in May to 7.6% in June, reversed direction and shot up to 8% in July. Yes, it was mostly veggies. They went up by 17% from their June levels as well as from their year-ago levels. But it wasn't all food inflation. Core inflation, or inflation not counting for food and fuel, rose by 0.8% in July over June, compared to a 0.7% jump in June over May. This monthly jump in July was also higher than the average 0.4% rise in the first 5 months of 2014. The core CPI refers to a dispersed basket like clothing, education, transport, personal care and house requisites. Yes, the wholesale price inflation for July has come in at a more benign 5.16%, and the core wholesale price index has risen by only 3.6% versus 3.9% in June. But the RBI governor has declared he looks at the retail inflation, or the CPI, and that he wants it at 8% by January 2015 and by 6% in January 2016. Let's recall his clarion call.
We're not against growth, but we do think that growth will be most benefited if we disinflate the economy and we don't have to fight this fight again. Let's fight the anti-inflation fight once, and let's win, and that will create the best conditions for sustainable growth.
So how will this governor react to a rise in consumer inflation in July? Yes, the core or non-food inflation fell by 70 basis points from September to June, from 8.1% to 7.42%. But will even this very slow pace of fall be sustained? Will food inflation flow into these non-food items and make them expensive? Does the government have a plan to tackle food inflation? Worse, if consumer inflation remains above 8% in the Jan-March quarter of 2015, will the RBI hike rates? And will it have the political support to hike rates?
Well, that's the setup, and those are the questions that rise before policymakers. To answer these questions, I have with me an eminent panel of economists: Dr. Pranab Sen, former Chief Statistician of India; Sajid Chinoy, Chief Economist, JP Morgan India; and A. Prasanna, Chief Economist, ICICI Securities, Primary Dealership Unit. Gentlemen, welcome. Dr. Sen, let me start with you. 8% consumer price inflation in July from 7.45 in the previous month. Are alarm bells already ringing in your mind? Do you think more policy hikes are needed to keep inflation at 8% by the first quarter of 2015?
Not yet. Frankly, episodic movements aren't that important. If you really look at what has been happening month on month, there has been essentially a downward trend to do any seasonal adjustment. So I'm not particularly worried about it as of now. What is in fact more worrying is that core inflation is sticky and indeed trending upwards mildly. And that's what we need to keep our eyes open for, because one of the things we should expect is, if the economy does in fact recover strongly, as it seems to be giving indications that it may, it's core inflation that's going to hurt.
Okay. Well, Dr. Sen, I'll come back to you on this worry, on this issue, that it is not worrisome yet, because I read reports of both Sajid and Prasanna, and they seem more worried about the CPI inflation already ticking to 8%. Sajid, what is the most worrisome aspect of the inflation numbers in July?
I think there are two parts to worry about, one of which Dr. Sen alluded to very clearly. I think the one worry is we're still not out of the woods when it comes to food inflation. The fact is, you saw a very sharp surge in not just vegetable prices, but cereal prices hardened in July. In August, you've seen vegetables spike up again the first week. There's some signs of stabilization the last few days. You've seen pulse prices go up sharply. So to the extent that we're still tracking 17% below on the monsoon, the fact that coarse cereals and pulses sowing is meaningfully below normal, we're not out of the woods when it comes to food inflation. And the worry I have about food is, if you look at the last 10 years, you can't separate food and core. The transmission from sustained food price shocks through a wage channel, through an inflation expectations channel to core inflation. In India's case in particular, is sharp and it's quick. We find for every 100 basis point increase in food, you get a 30 basis point increase in core with a lag of a quarter or so. Now, I'll just make one other point. I think Dr. Sen's point is very valid because in a way you can assume the growth cycle has bottomed. We're going to see some growth acceleration, perhaps more modest than some people expect in the next few quarters. So to the extent that growth is picking up, aggregate demand is picking up, and therefore pricing power is picking up, this becomes a pretty toxic combination that food shocks are high, inflation expectations are high, we know input costs have been high the last 2 years, and now if demand's picking up, you might find pricing power picking up. So my concern is both on the food front and on the core front in the next 2 quarters, if there is no rapid policy response by the central government to address food inflation.
Okay. Well, Prasanna, Sajid is making a strong case that food inflation works itself very quickly into the non-food elements. This time around, if we have to contrast it with 2009, which was a clear drought year, the difference is that global commodity prices are more benign. Do you think that we are in danger of this very quick translation into non-food prices like we saw in 2009?
Yeah, so that is definitely a positive. Like you mentioned, global commodity prices are benign, both agriculture and non-agriculture. And secondly, I think the policy setting is also different, right? I mean, both monetary and fiscal policies were highly accommodative in 2009, and now definitely monetary policy is on the tighter side, and fiscal policy, though not by design, but at least in practice, is also on the tighter side. So I think those differences do matter. So I think this time around the transmission to core might be much slower. But that said, I still think we can't ignore the fact that the fall in core inflation has been very, very gradual, and I think the kind of growth slowdown we've had, and then you see the kind of a very glacial pace of decline in core inflation. I think that is worrisome, definitely.
Is there an absolute level of core inflation as well that will give you comfort, Prasanna? I mean, 70 basis points have fallen from September to now, that is July. So what is an absolute level which might give you economists and RBI comfort?
I mean, if you're talking in the context of the ultimate 6% target of RBI, I think core inflation should be below 6%, right? I mean, you should, obviously you should expect some shocks to keep recurring on the food side and even on the fuel side. So if you're saying that you want to keep inflation sustainably below 6%, your core inflation has to be below 6%.
No, that is the Jan 2016 goal. But for us to believe that we don't have to yet hike rates and create disinflation, what is the level that will give you comfort?
So by Jan 2015, core should fall to at least to 6.5%.
Okay, so another, 80 basis points fall?
Yeah, 80-90 basis points, yeah.
Okay. Well, Dr. Sen, obviously everyone's eyes now are on how much the government is doing to ensure that there is a visible sign that food inflation is being controlled. I don't see any, except that I understand the Food Corporation of India has offloaded a sizable amount of food grains. How have you interpreted the policy seen? Are you seeing any concrete response at all to food inflation?
Well, I think there is a wait-and-see position, and I think that's the correct one. At the moment, we are still in the sowing season. This is a lean season around every year. This is a lean season. They really need to have a feel for what is going to be the harvest like, and therefore what should be the pace at which the government stock should be put out into the market. I mean, you just don't come down with a hammer at one shot. So there's a wait and see, but hopefully the noises that have been coming out of the system suggest that this government is likely to be more aggressive with their open market policy in food grains. So I am very hopeful.
Okay, but open market would still impact only the food grains. This time, as in 2009 and even last year for that matter, we have seen onions, potatoes and vegetables take the lead in exacerbating inflation expectation. We heard a lot of noise, and in fact the BJP manifesto had it. The Prime Minister mentioned, at that time the Prime Minister-elect or the person running for Prime Minister repeatedly said that he is looking for changes in the APMC Act. We have not seen any action on the ground. So is there still that flank open with vegetables posing a very big threat?
Look, vegetables will pose a threat. Anytime you have bad rains, vegetable prices will spike. I mean, there's nothing strange about it. The real question is that food grains, which forms about roughly half the consumption of our households, if the inflation on that continues to mount, then it becomes a real worry. It has two effects. One, it has an effect on the household budgets. Much more importantly, it has an effect on the incentive structure for farmers. So controlling food grain inflation is extremely important. Let's not underplay it, even if you have very high price rises in potatoes and onions and what have you. And I think this government is serious about it, but they should do it in a calibrated manner. You know, any drought condition plays itself out over a 6-month to 7-month period, and therefore, you know, getting gung-ho about what you do in the food grain market can be dangerous.
Well, July cereals inflation is 4.46%. Prasanna, will that give you some hope?
At the time of the harvest, obviously, if you do see the shortfall based on the sowing pattern, and then prices start spiking up, so that's when the government needs to react. So I think that the idea here is that you don't allow again prices to kind of spiral out of control from here, and you react and you release your food stocks in a proactive manner so that you control it and you bring it down.
That's what we're expecting in terms of government policy reaction. We have to take a quick break, but thereafter, does the RBI have any leeway to cut rates even in the Jan-March quarter, considering that almost everyone is expecting growth to kick in from perhaps April, if not earlier? That question to our panel after this break.